All right. Hello, everybody. Welcome back to another episode of the Market Open. It is September 15th, 2023. It is 8:46 a.m. And we are here, I believe, on episode 3 of the official 75-minute version of the Market Open. I am feeling pretty good. I slept last night at about I think 10:30ish I knocked out. I woke up at 5 today. Yesterday I woke up at 2:45, so just a little bit later than yesterday. And the reason I didn't wake up at 3 today again is because my phone died while I was sleeping, so the alarm didn't go off. So I naturally woke up at 5. I thought it was like 3 a.m. I naturally woke up, but then I checked the computer and it was 5. So we're here again. I am really I know it's only 2 episodes in, and I don't think I would get burnt out by this, but I'm enjoying it. I'm enjoying doing a long show. I'm enjoying having we have a lot of time until 9:30. We've got 45 minutes to really discuss and get into a lot of topics that we have to talk about, and then go deeper into it. So I'm excited. It's fun. It's interesting to me. There's always stuff to talk about. And if there's not stuff to talk about, you kind of find stuff to talk about and hopefully make it interesting. And it's exciting to be here with you all today. So let's get started and let's open up the market. Quarantine Quartet, Miami Run, Hawk Sung, Warren, Puppet, Joseph Villegas, Ty Gordon, Hakun Garcia. Thank you all for being here today. Ty says YouTube didn't notify me. I'm just getting this out of the way for the stream. Yeah, you're gonna have to, for those who want to get notified, you're gonna have to hit the bell thing and for the channel so that it notifies you, and hopefully YouTube just sends a notification. Sometimes it doesn't. You know that YouTube notifications are based on their algorithm, and it's like if they think they won't annoy you with the notification, then they'll send it. If they think they're gonna annoy you and you're gonna turn notifications off, they're not gonna send it. So it's very algorithmically driven, and hopefully you guys don't get annoyed so that YouTube sends you the content. Kelly, good morning. Are you ever not streaming? Goodness. Again, starting a little bit earlier because I'm already up in the morning. It made more sense to me. I'm up 3 hours before this. I'm already consuming the news. And so now I get to come and actually just start 45 minutes earlier than I would usually start and get more time to talk. So it's fun. I talked about, I'm going to move on from this topic in a little bit, but I talked about this a couple days ago when I decided I wanted to do this. And I got a text the other day from someone saying your market opens are like a symphony. And outside of inflating my ego, I took it seriously because what is a symphony? There's an orchestrator that's conducting this entire group to act in harmony in a symbiotic relationship as one, so that the audience feels the level of emotions and ultimately discovery of new ways of experiencing music on that one stage, because the orchestrator is conducting how the orchestra is going to play the music. And so if I can do that with my voice through the transitions of the topics and the analysis, and hopefully the opinionated entertainment that provides some nuance and explanation of what's going on in the markets of the world, then it kind of feels like I'm running a symphony. And honestly, that's why it's more fun than anything to run. It's definitely not the ad revenue. It's not like doing 45 minutes on YouTube is going to give you, it will give you maybe 30 more cents. It's like for the fun and the joy of doing it. Okay, so let's get started. Here we go. First thing we got to talk about, ladies and gentlemen, is the ARM IPO. The title of this stream is that if you did not invest in ARM and make 35% in one day, then basically you should quit investing. And I actually really believe in that. No, I'm just kidding. I don't believe in that. We were talking, me and Arnie and someone else in our group chat today, Amir, and we were laughing about it because, yesterday people were like, should you buy ARM? And I said the respectful thing, the responsible thing, which is no. Because even if I thought ARM was going to do well, if you say it's going to do well and it doesn't do well, you look stupid. If you say it's probably not going to do well and it does well, at least you don't look that stupid because you didn't tell people to buy something and they lose money. Losing potential gains versus losing actual gains is a whole different way of thinking about it. So ARM right now, as you can see on the screen, up 25%. It was up 35% at one point. It was at around 68, 69 bucks. And then it came right back down to 64.47, still up in the pre-market, $1.43. Why did ARM have such a successful IPO? I think there's a couple of points of reasoning. We're going to watch an interview from Masa Son, who is the CEO of SoftBank, or at least the CEO of the Vision Fund at SoftBank. And we talked about him yesterday, how he made a lot of failed investments in companies like WeWork and Uber, or investments that just really didn't do that well. They invested in a startup that, a couple $100 million went to shit just a couple months ago. And so they needed to get this one right because they've had this one for a long time. They needed the market to give them exit liquidity. Market cap right now at $65 billion, which is still under the $71 billion they priced it at in October, but above the $32 billion they had in 2016. Why did the market buy the ARM IPO? I think there's a couple of factors for it. Number one is that if you looked at how ARM was marketing itself, at its core, they have said that the AI revolution starts with ARM. I mean, this is the type of terminology that a lot of the people that were doing the roadshow for ARM were essentially telling to the market. The roadshow, for those that don't know, is when a company goes to all these investment funds and banks and basically gives them a real presentation, or it could be a virtual presentation, on why they should buy their stock. And every company has to do this. So during the roadshow, ARM was basically saying there is no AI future without ARM. And, it's so funny because like we think of these investment hedge fund guys and people that like do all this due diligence and they think really hard before they make a decision. And if they don't like really dive into the numbers, they're not going to do the investment. They're just as, and I was going to say the word stupid, but I don't mean in a negative way. They're just as stupid as all the rest of us, right? As retail investors. At the end of the day, they buy into a narrative. Do they care about the numbers? Sure. And should you always care? But yeah, like the numbers really matter, valuations, all the stuff. But when you're investing at early stages like this, when it's like the early days of an IPO, you're looking for a narrative. You're looking for something that you think can pump up the stock. And as a result of it, if you're in it at that IPO price, it could pump a little higher. I would not be surprised if a lot of these hedge funds take a 25% gain this morning and it drops, or maybe they hold it over the weekend and see if there's even more momentum and juice in here. So if you have a compelling narrative, at the end of the day, you're selling a vision. And if that vision is conducive with how the market interprets that vision, you could go up. The stock could go up. The stock could make money. So I think they did a really good job marketing the AI revolution starting with ARM. And they're not necessarily wrong about it. It's just a question of if it's going to grow at the levels of what we see from NVIDIA. NVIDIA is the only company in the world getting a real revenue, their multiple is reflective of the growth of revenue, because the growth of revenue is absolutely insane, right? 101% year over year. Now, ARM at this valuation, especially today in the pre-markets, is over NVIDIA's valuation if you just look at a price to earnings. And the lack of growth compared to NVIDIA is like, right? ARM's growing less than 2% or whatever, or they didn't grow last year. NVIDIA's growing 100%, but they're trading richer than NVIDIA. So really, if you made an investment in ARM, you're betting that the growth will be there because the valuation is worse than NVIDIA's in terms of the rich multiple, and the growth is abhorrent compared to NVIDIA. So you're imagining growth is going to be there. And there's a simple counter argument to why growth won't be there. People are not going to buy that many consumer electronics, which is where ARM gets all their royalties. For example, for the iPhone, right? Like if people don't upgrade to the iPhone 15, ARM's not going to make as much royalties on Apple selling those phones. And so that's going to be really interesting to kind of think where it goes from there. But that is why the ARM IPO was successful. At the end of the day, people bought into a narrative. Also, I think another reason is retail. I mean, retail at the end of the day got really excited by the stock. There was a guy in the chat yesterday who said, Amit, I'm going to buy the ARM IPO. And I was like, he said, can I sell Pouncer to buy the ARM IPO? I said, look, it's going to be a little risky, but you do you. He was like, no, I'm going to come back to your stream in 3 hours and show you how much money I made off of ARM IPO. Then we're in the Pouncer live stream. And we're listening to AIP, and he's like, Amit. And I'm like, hey, Matthew. He's like, I made 15% in 10 minutes on the ARM IPO. I'm like, well, I look like an idiot because I said not to do it. But, I think a lot of retail momentum was there to also carry the stock to some new levels as well. Now, let's get a little bit of an update on ARM by Masa Son, who is, again, the CEO of SoftBank. And here's him on CNBC yesterday basically describing why the ARM IPO would be successful, and he ended up being correct about it. Okay, here we go. Peter says, good morning. Good morning, Peter. Thank you for being here today.
Amongst investors is the company's reliance on China. It's about 25% of revenues, and it was a subject of some of our conversation. Take a listen.
Our China business reflects the growth we see in the rest of the world. We're seeing huge growth in the data center around cloud computing, also with AI. And then EVs, huge growth in China in terms of EVs. And China wants a lot of what the rest of the world needs: power efficiency, software ecosystem. A lot of the same software that's used across the world is used in China. So what we're seeing, David, in terms of our China market growing is largely around those two areas, data center and automotive. Now, in terms of the broader issues, I think I share the same headaches that just about every tech CEO does these days. We comply, of course, with all the regulations that come down relative to export control, if there's something that we need to adhere to, of course. But it's really, it's a tricky market to figure out just in general because of all the things that are going on geopolitically. But broadly speaking, our China business has been doing very well.
Yeah, I want to get back to the business itself. But Masa, your SoftBank owns a significant stake in the joint venture that I'm describing in China. You've obviously done business there. You were a very large holder of Alibaba for many years. What is your sense in terms of the risk that China poses, given the percentage of revenues that it comprises for your company, for ARM, is quite high?
U.S.-China is having a very complicated situation now. China has a significant, impact to the economy of the rest of the world. So I hope the situation gets better, but who knows? I'm one of the citizens who is wondering and concerned about the future of China, U.S., and the rest of the world.
That guy right there that you just heard talk, Masao Shisan, he raised $100 billion to start the Vision Fund. That's the guy who raised $100 billion. Now, I'm not saying he's not deserving of the $100 billion or anything, but coming from someone who talks very fast, it's interesting to see someone who talks so slow, take their time, so relaxed. Like I can just imagine that pitch, right? Like the Saudis are like, why should we give you $100 billion? And he's like, so I think, it's just crazy that like someone could actually raise $100 billion with that type of demeanor, and he got the job done. Now, a lot of investments went to crap, and so, it is what it is. But ARM is one of those companies that I guess ended up doing well in terms of the IPO, and that gave them liquidity. What they're talking about there in terms of their China business is 25% of ARM's revenue is in China, and that already is a red flag for the. It's like the China relations with the United States are not good right now. China has stated, by the way, like they've quoted in 2027 we're invading Taiwan, and so it's a really complicated thing. But I guess 2027 is a couple years from now, so in the meantime you can make some money off the ARM IPO if it ultimately makes sense. The Sean File say, I love how fast you talk. It's only because I don't want to act like I'm not giving value. That's I don't want to be elongating my words to keep you here longer without saying anything. And, then it gets annoying. But I do know sometimes I need to slow down because sometimes it's a little too fast. Joseph, well, yeah, pretty much. It's a good comment. Okay, so the other thing about the ARM IPO, and then we're going to move on to the auto strike, is not only did retail get really excited about it, but if you looked at some of the institutional investors on CNBC yesterday, one of the core arguments they made in regards to why they were participating in the ARM IPO is because $1 billion out of the $5 billion that ARM was trying to raise was from what's his name? What was from Google, Nvidia, Apple, and TSMC. So you already had, if you're trying to raise $5 billion and 20% of that $5 billion is secure, the oversubscription to the round becomes even more amplified by the fact that there's $1 billion off the table, and that $1 billion's guaranteed. That $1 billion is not like retail investors. That $1 billion is like, the largest tech companies in the world saying, yeah, we'll buy $1 billion, which is a couple pennies to them. And so when you get that level of commitment, and I personally, my tinfoil hat theory is that ARM went up to Apple, Google, and they were like, guys, like, we've been making your chips. We've been making everything you need to be successful for the past 30 years. Can you please just buy $1 billion of the stock, please? And I'm pretty sure to keep relationships good between ARM and those tech companies, $1 billion is nothing to them. I mean, it's like literally nothing. And they were like, yeah, sure, whatever, right? And that's kind of how they secured making sure that the float available for the IPO would be more oversubscribed, and as a result of that would be even better for the IPO to be successful. So that's what I believe happened a lot. That's what I believe happened to be able to make the ARM IPO as strong and successful as it could be. All right, so that's the ARM IPO. Let's move on to the next topic, which is a really important topic, and that is the auto workers strike. Look, this is a developing story, and this is really important to pay attention to because it has massive inflationary pressures. They are officially on strike with the three firms, Stellantis, Ford, and GM. CEO Mary Barra went on CNBC today and basically is trying to make their case. Now, in a negotiation, and I'll share the clip in a second, what happens is two sides come to the table, right? And one side says, I want this. The other side says, I want this. They negotiate, and then they try to come to a deal. And it's hard, tough negotiations, but you come to a deal. I've been in negotiations in my life. When I started my first consulting firm back when I was in college, I was negotiating with clients over the phone. What prices should we price my services at? All this stuff. So I've been in those high-level meetings, sometimes successful, sometimes not. But I do remember a lot of times what it feels like to be able to put a price out there and kind of stick with your price and maybe come down a little, but not all the way to where the client wants to go. And then you come to an agreement. What the major three automotive CEOs have said is that we can't even get in the room with these guys. We are putting historic offers on the table, and they are not listening. If Ford, for example, were to accept the offers from the auto workers currently at the current negotiations, they would lose $12 billion over the next 4 years in profits. And so to them, this proposal unacceptable. To the workers, they're like, there's no way we can not have a pay raise after the CEOs are making a crap ton of money, which I am sympathetic for. I mean, it's not their fault inflation is rising, right? All they did was do their job. And so at some level, the CEOs making another 25 million bucks, you're like, yo, like, why can't we get $1 more an hour or whatever? And so the question becomes, when is the negotiation actually going to be able to happen? So here's Mary Barra, CEO of GM, actually speaking about this. And then we'll talk about the implications of this on good old Tesla.
Launching strikes at 3 plants after failing to reach a deal with GM, Ford, and Stellantis. And Phil LeBeau joins us now, the CEO of GM, Mary Barra. Hey, Phil.
Hey, Joe. Mary, thank you for joining us. Mary Barra, Chair and CEO of General Motors. Strike was called at midnight. What's your reaction initially? And I know you knew this was coming, but what's your reaction?
Well, Phil, our team has been working since July 18th to bargain in good faith. We've had over 1,000 demands. I'm extremely frustrated and disappointed. We don't need to be on strike right now. We put a historic offer on the table that not only has very significant gross wage increases, total through the contract, over 20%, that compounded is 21%. But we also have job security. We maintain world-class healthcare. There's so many aspects of this, of the offer we have on the table that I think really is going to resonate with our employees. So we didn't need to be here.
You said frustrated. I sense there's a disconnect between the automakers and their negotiations with the UAW that we haven't seen in the past. There's always contentious discussions during these things, and sometimes there's a strike. But something seems to be different this time around. What's changed here?
Well, every negotiation takes on, the personality of the leader who's running, from a UAW perspective, as well as what the situational issues are of the time. But, I think the key in any of this is to get to the table, talk through the issues. And that's what we've been working to do since this began. And again, we had over 1,000 demands. You've got to work through each one of those. That's part of the process. So we've been working very hard. We've been working to problem solve. And we're going to continue to do that. We're there now and ready to keep going.
You've made 4 offers. How many offers do you think it's going to take? And at 20%, how much higher can you go?
Well, I think we have a very generous offer on the table right now. It's historic. From a wage increase perspective, it's the most significant offer we've had on the table in our 115-year history.
Yeah, that doesn't mean shit. Inflation has gone up a lot over 115 years. So this is all BS, what she's saying right here. And the auto workers, to take their side on this, just, on this specific point, they would say, we don't care. I'm about to check Mari Barra's salary real quick, but yeah, 115 years ago, obviously the dollar was worth a lot more. So if you're saying it's the most significant increase in 115 years, no shit, it's the most significant increase. The question is, does it keep up with inflation to increase purchasing power in 2023?
So, I'm not going to bargain in the press, but, we need to get there fast because this is not good for our employees. It's not good for the communities, their families. And for every GM job, there's 6 other jobs in the economy that depend on us running. So we got to get back to work.
If they start striking at other GM facilities, how much will that hurt the bottom line? How quickly will it hit the bottom line?
Well, we're in the business of making cars, trucks, and crossovers. So it can, depending on the length in which plants, it can have an immediate effect. But we've been through this before. We've been through COVID. We've been through the semiconductor. We've got an incredible team who's been preparing. We're ready. We're going to do what's right. But this is not going to be positive from an industry perspective or for GM.
All of your plants, to a certain extent, are interconnected. Even though these are final assembly, Wentzville, what happens in Wentzville doesn't happen in a silo. And so the question becomes, if other plants are hit, and I'm talking separate from an engine and transmission that feeds all the plants, is there a ripple-on effect in terms of it adds to the complexity of managing the situation?
Absolutely. Because, a lot of our assembly plants also have contiguous stamping plants that may serve other plants. So, we've worked to have a very efficient manufacturing network. So, yes, even one plant is going to start to have impact.
Any chance we see a change in production? Separate. I mean, obviously, Wentzville's not in production right now, but any sense that production, while it continues at the other plants, does it change?
We'll evaluate that. The team has already been looking at that, and we'll continue to do that and be very responsive. Our team knows how to manage this.
All right, so let's go through a couple of facts now that we got to hear from GM Mary Barra. So first of all, how much is this woman making? Here you go. $28.97 million, which was a little bit of a pay cut from her 21 compensation of $29.1 million. So $28 million, it's tough, man. And look, from a capitalist perspective, because through thick and thin, I am a capitalist. You can't just say she's making 28 million and the GM workers are making $64 an hour, 50,000 a year, and be like, look at the gross disparity. It's like, well, the CEO should be making a shit ton more than the workers. They're the CEO. They have more responsibility. They're conducting a lot of, they're the reason the business is alive for those jobs to exist in the first place. However, when inflation's going up, you can't be saying that, it's not a big deal that the CEO is making, 2,000 times more than the average worker, because if the average worker doesn't feel like they have any purchasing power, the typical capitalist argument, it doesn't resonate anymore, even if it's logically correct through the market, through the principles of the free market. And so for Mari Barra, it's tough for her to get on CNBC and act like she's, being all ethical here and they're putting their best foot forward, when in reality, it's tough given where inflation is going. Now, what does this mean for Tesla? Tesla is the only major American auto manufacturer without a union in the United States. And that is why Tesla is probably laughing their butts off at everything that's going on. Tesla workers in California and New York have tried to unionize, but they have been unsuccessful. Elon in 2018 talked about how employees could vote to unionize, but they would lose stock options if they did, which is a hell of an argument. You know why? Because in 2018 to 2020, the stock, I think, 20x'd. So imagine if you were a union worker, you had no stock. I mean, I would probably imagine, because automotive companies don't have a stock that 20x's, right? They pay a little nice dividend and tell everyone to be quiet. When you have a growth tech company that also makes cars, this is the benefit of AI technology and Elon Musk. If you're an automotive worker and you have stock options, you probably make a crap ton more off the stock options. Potentially those stock options set you up to have like a 5 years emergency fund of cash, because of, the fact that you actually have those options at a cheap price, than a union could ever provide you in terms of safety. So stock options versus safety, obviously those stock options were very valuable to the union workers. Tesla workers earn about 1/3 less per hour than Detroit. So Tesla estimated labor cost is about 45 to 50 an hour. Detroit threes, Stellantis, Ford, and GM, 64 to 67. So the GM workers are making much more than the Tesla workers, from 64 to 67. I think they want closer to 80, $90. And, the problem is, in the context of the big three, as I said in the beginning, Ford would lose $12 billion in profits over the next 4 years if they tried to do this. So shareholders would get destroyed, which is, not a good thing for the company. On top of that, and here's the thing, a lot of people aren't considering, the transition to electric vehicles is here. And all these legacy automotive manufacturers, they're late. They're very, very late. I mean, like, they're years behind. If they now have increased labor costs, which is just another headwind for them to be able to make the transition and vertically integrate their supply chains to turn into EVs, it's just more pressure. On top of that, who knows if those EV cars are going to have margins? Tesla has margins because they have FSD and all these other things. I don't know if Toyota selling an EV has a margin, because right now Toyota selling a Camry has zero margin. They make money off the interest from financing the car. So if you have no margin on the car, and you have increased labor costs, and you have the cost of trying to figure out how to make an EV, and there's no EV that costs $25,000 yet, Tesla's going to usher in that revolution. I don't think Toyota is going to be the first to really make a compact EV car that sells millions and millions of cars that's affordable. It's a tough market to be able to compete. And one could argue, if this gets really bad, there is a shot that these companies could go bankrupt. Now, I don't think that's going to happen. I think that they're going to resolve it. I think they're going to figure it out. But it's something to take into account. And from an investment perspective, as a regular person interested in the markets, inflation. It's not going to be good for the next 3 months if we have less supply of new cars, not because new cars will become that much more expensive, because we still have a lot of new cars, but used cars will get even more expensive because people are just not going to buy a new car. They're going to go for a used car, which means demand is going to go to the used car market that is not going to have as much supply because there's more demand. Prices are going to go up. And the problem is the used car index is 7% of consumer price index of the CPI. And that's going down 15% month over month. If it goes down another 30%, we're going to see a dramatic drop in the CPI because of the used car index. If that starts going up, we're not getting to that 2 handle on inflation, and we might not even have a 3 handle on inflation by the end of the year. So this has a lot of implications for the general market, but obviously a lot of implications for these car manufacturers as well. Joshua says, what does she actually do that makes her worth $29 million a year? I think you can say this about a lot of CEOs. I mean, at the end of the day, a CEO is just a spokesfigure for the company. right? Like, and that 29 million, I'm sure a lot of it is in stock, not like actual salary. But their job is to make sure, honestly, the way I understand a CEO, and this is a blanket statement. Obviously, there's a lot of CEOs that have a crap ton of responsibility, especially Elon, Zuckerberg, right? But a CEO of a company, a public company that pays a dividend, kind of a value company, their job is to make sure things are running smoothly. But more importantly, this is what makes them the hundreds of millions, is to make sure they know how to communicate with shareholders. Because if you can communicate correctly with shareholders and they buy your stock, that's all shareholders care about is shareholder value, right? That's like, don't get into any scandals, don't do any harassment, don't just stay out of the public limelight from a scandal perspective. Is why Uber CEO and founder Travis Kalanick had to step down. But just increase the value of the stock. That's it. And if you can communicate correctly to increase the value of the stock and keep things running smooth, even if on the day-to-day you really will never do as much as one of the actual workers, then that's why you deserve that salary. On top of that, one could make the argument that they suffer for so many years in their life to get to the point where they can have that salary. Like, I'm sure Mari Barra spent, she's 61. She spent 40 years probably doing a ton of stuff to be able to get to that position. And you usually don't give that position to someone who's young unless they're a founder and they start a startup and stuff. And like they founded the company. Frank Slootman, right? CEO of Snowflake. He did a ton of stuff before he got to that position. And that's why he's the one running the ship right now. So I think that's what dictates the value. But at the end of the day, the workers don't want to hear any of that shit. They want to get some money. Carb sweating nervously right now. Well, see, the reason tech CEOs never have to deal with this is because they pay their workers so much money. I was thinking about this yesterday, so it's funny you bring it up, Garcia. Like a tech company, like all right. So here's my thesis on this, and then we'll move on. What's the next topic we have? We have to talk about Instacart. We'll talk about the Instacart IPO, and then we'll do a little bit of Palantir AIPCon recap, and then we'll get into the market open at 9:30. So what tech companies have been able to do, which is so interesting in my opinion, is they have created a trifecta. Okay. The trifecta is, and this is the thing, this is the reason why if you're alive on planet Earth today, it is incredible to witness this happening, much less if you're going into the workforce and want to work for these tech companies. By the way, in the chat, if you work for a tech company, put it in the chat. Marketing, product marketing, software engineering. Let me know in the chat if you work for a tech company. What tech companies have been able to do is figure out how to give consumers products they love and enjoy. Why? Because we're digitally native and we're using these products on our phones, our laptops, right? So it's stuff that's like fun to engage with, whether it's a Spotify or a YouTube or Amazon or Audible or whatever. Okay, so you got consumers. You got consumer satisfaction down. Number two, you have infinite consumers. That is why a tech company can be worth a couple $1 trillion. You have literally infinite consumers. There are an infinite amount of people in the world that will listen to music on Spotify. Right? Like, and does that mean Spotify is going to capture the whole market? Obviously not. But there's 8 billion people. There's more people being born every day. 4 billion of them probably don't even know what Spotify. More than 4 billion. Probably like 5 billion never even heard of Spotify. Right? They're like the not 4 billion aren't even on the internet. So theoretically, you have an infinite user base. Facebook still has an infinite number of people because people are going to die. There's always going to be new people that are born. People are turning from different generations. They're going to join. Like tech products are infinitely scalable. So you've got infinite scale, which means you've got these massive price to earnings ratios. You've got consumer satisfaction because the products are actually really easy and cool to use and they make your life so much better, productive, AI, all that shit. And then on top of that, the people you pay to build these types of products are compensated very well because the margins you're able to build on a tech business, because the tech business doesn't have any really fixed costs because it's a tech business, it's infinitely scalable with the internet, means that you can afford to give someone $500,000 a year. And that's literally a penny, less than a penny to someone like Google that did 72 billion last quarter in 90 days. So how many minutes are in a day? Let's do this real quick. How many well, there's 24 hours. I could do that myself. 24 hours times 60 minutes. Okay. So there's 1440 minutes in a day. So divide 72 million by 90. So Google made 72 billion, sorry, 72 billion by 90. So 800 million a day. So 800 million divided by 1440, Google makes $500,000 a minute. And so as a $555,000 a minute. So as $555,000 a minute, let's just get a little more fun with that. 555,000 divided by 60, Google makes $9,259 a second. Boom, $10,000. Boom, 10,000. Google just made 10,000. One, Google just made 10,000. Another one, Google just made 10,000. Like that's how crazy Google is, right? So when you're having revenue like that, you can afford to pay tech workers really well. And so I think it's really important to understand the era we're living in. If tech companies have enabled this massive level of growth, massive level of consumer satisfaction, massive level of scale, in fact, infinite level of scale, it is one of the greatest times to be alive, because if you can enter in that ecosystem in some capacity, you can participate as a human being on this planet because some guy or gal had a vision to build a Facebook or a Google or an Amazon. They executed that vision. Shareholders allowed them to execute that vision. And now hundreds of thousands of people can participate in that vision and make not just a decent living, a phenomenal living. And so it's a really interesting time in the tech companies, but obviously the auto companies are not at that level yet, the legacy auto companies, and that's why I think the strike is important to understand them, or to understand their perspective. And as I say, tech companies are amazing. Tesla and Alantier says, hello, I'm here after the horrible iPhone pre-order experience. So tech companies didn't figure out how to make sure you can buy your iPhone in a interesting way. Let's see some of the comments right here. I'm an augmented reality specialist and technical artist, but it's for a nonprofit, so I could be paid more. Wow. Yeah, it looks like, I mean, I'm happy you're doing it for a nonprofit, but it looks like if you take those skills to a profit, you could definitely make a lot of money. But see, like augmented reality specialist, did that even exist 10 years ago? Like it's just insane. We live in that time. All right, moving on to our next topic. Thank you, 383 people, for being here. We are talking about none other. We are talking about Instacart, ladies and gentlemen. Instacart, we got some news on Instacart today. What is the news? Instacart saw the success of ARM yesterday. And their original prospectus for the IPO was about 21 to 25. They have shifted the price for which they will give an initial public offering to the public at $28 to $31. So they are trying to raise their valuation by $1 billion for their IPO. So it begs the question, if you are a loser because you didn't make 35% in a day on the ARM IPO, as per the title of this video. So if you're like me, a little peasant that can't make 4 years of the S&P in 10 minutes because we refuse to buy ARM, can we recoup our opportunity cost of losses and get the Instacart IPO? Is there a reason to buy the Instacart IPO? Now, obviously, I'm being facetious. I'm not buying the Instacart IPO. I don't think anyone should buy it. Just personally, I think it's still very risky, in my opinion. But let's go through some of these numbers. Okay, let's go through some of these numbers. So I pulled up their S1. For those that don't know what an S1 is, it's a prospectus you have to file with the SEC when you go public, and you have to expose everything. Fun fact, when WeWork had their S1, they were valued at, I think, $20 billion. They were trying to go public in 2019. They got ripped apart because they had their accounting, like they had like chief visionary accounting. They had like fake accounting. It was some ridiculous stuff. And they couldn't go public because the market was like, this is the dumbest like S1 we've ever seen. So this document is actually very important for investors to understand some of what's going on. Here are the core 4 metrics. And then I want people in the chat to tell me, do you think this company is valued at $10 billion? If they IPO at about $31, it's around $10 billion. Orders grew from 223 million in 2021 to 262 million in 2022. So they increased orders by 18%, 262 million orders every year on their app. If we divide that by the number of days a year, that's about 17. What is that? That is 717,000 orders a day their app processes. Gross transaction volume grew from 24 billion in 2021 to 28 billion in 2022, an increase of 16%. So $28 billion exchanges hands on the app in terms of transactions for Instacart. Total revenue grew from 1.8 billion in 2021 to 2.5 billion in 2022. That's more than Palantir, by the way, 2.5 billion in revenue. Obviously, this is a consumer company. It's different, but just put it in context there. The valuation is going to be 10 billion, 2.5 billion. So about a 4 times price of sales, increase of 39%. Revenue is growing currently at 39%. Now, will that growth keep up? Because remember, when Palantir went public, their growth was at 47% as well. So when you go public, because you're transitioning from startup to public company, the growth always looks amazing because startup growth is like in that 100% year over year, whereas public company growth is not that easy to get to those same levels. And so far in 2023, they've done 1.5 billion for the 6 months, an increase of 31%. So if they just keep on track, they should do 2.95 billion this year, which would be, if we do this correctly, it would be a 15.6% increase in revenue. So if they end the year with the same amount of revenue they got in the first 6 months, they would have 2.95 billion, which is a 15% increase from the 2.5 billion they had last year. So it's not going to be growing at 39% 9% if they end the year with the same amount of revenue they had for the first 6 months of the year. It's going to be growing at 15%, which is something to take into account. The reason for that is probably because of interest rates. So I don't think that's like a dramatic decline, but that definitely is one of the factors to think about. Now, here's the last stat I want to talk about. Well, last two stats. Advertising and other revenue grew from $572 million in 2021 to $740 million, which means 30% of their revenue was $740 million. I mean, that's insane. So 740 out of the 2.5 billion, 30%. That's a big deal. That is that's what Uber is trying to get to, right? With selling ad space on the app. And that, to me, is where there can be a very big opportunity for growth in the business, because they don't have every grocery store in the world. Like, imagine if they expand to Spain and India, and India is very competitive. They have a bunch of Instacart copycats, but like, imagine if they get to like Brazil, and like, there's grocery is everywhere. Grocery is what we spend the most amount of money on. That's like the kind of core thesis around the product. And then finally, gross profit grew from 1.2 billion in 2021 to 1.83 billion. So they did 2.5 billion in revenue 2022, 1.8 billion in profits. This is a very gross profit. I'm sorry. Net income is actual profits or loss. I'm sorry about that. Gross profits was 1.8 billion. Net income was from 73 million of a loss to 428 million. So they made 428 million in 2022, not 1.8 billion. That would be a little insane. 428 million in 2022. So they are GAAP profitable, which is also a very good thing for a growth company IPOing at this stage if you are GAAP profitable. So here's one of the things I want to show right here. This goes over again a little bit of the numbers, but this is the big thing. 85% of the U.S. grocery market, 5,500 brands, 80,000 stores, and 1,400 retail banners. Let me do a real quick. How many grocery stores are in the U.S.? Okay, grocery stores in the United States. Oh wow, interesting. So, I mean, this search result might not exactly be the great. This says there's 63,000 supermarkets. There's probably a lot more individual grocery stores. They have 80,000 stores, 85% of the U.S. grocery market. I don't know if they're international yet, but if they're in the U.S. markets, that means they're talking about a lot of mom and pop stores, obviously not like all the Walmarts of the world. So there's probably a lot more stores in the United States for them to capture, but it just goes to show you how many stores they've been able to get under their app for if they have 85% of the entire grocery market. Which means, there's probably another couple 30,000 stores left for them to be able to capture. The real big two arguments for me in the context of Instacart are two things: advertising revenue and an international expansion. 80,000 stores in the United States, I don't know how many stores there are in Brazil, but if there's another 80,000 in Brazil, that's just going to be insane growth, right? If they're able to capture that. Like, everyone buys groceries. My mom, anecdotally said the other day, hey, I'm thinking of getting Instacart. And I was like, why? And she's like, because I just don't feel like going to the store. And I was like, first of all, Americans have become so privileged where we can't even just get in the car and go to Costco. Like, it's insane, in my opinion. But the fact that she even thought about doing that, and she probably saw an ad on Instagram for Instacart, and I think her friends use it as well, so the word of mouth, that surprised me. Now, we haven't signed up yet, and I haven't used it, and quite frankly, I don't think I'm ever using it. I'm just going to go to the store. But it seems like the demand is there for the average consumer. And if the demand is there in the United States for people that don't want to go and get their groceries, it's simpler. It's like Uber Eats and DoorDash changed everything. DoorDash is a huge company because people just don't want to go to McDonald's. They'd rather just have someone deliver it, and they'll pay on DoorDash, it feels like $15,000 of premium, but they'll pay the $5-6 of premium to be able to get the delivery. It seems like people are willing to do the same for Instacart. And if they're willing to do the same for Instacart, you would imagine not only in the United States, but in Brazil and Italy and in Japan, I mean, like everywhere around the world, people would be willing to do that to some extent, which is the growth opportunities for Instacart. Matt says Instacart is amazing for elderly people. In college, I did Instacart deliveries and delivered to a lot of elderly people. Matt, could you tell us how much you made? How much was your average hourly wage if you had to calculate it from Instacart? Was it like better than minimum wage? Was it just about minimum wage? Did it, when the cost of gas, how did that factor in? I would love to know how much you actually thought or how much value you actually got from Instacart. So that's the first thing, right? This international expansion. The second thing is this advertising growth. Again, and this was my point. This is why I went on the diatribe a couple minutes ago around tech companies opening up opportunities. This company figured out how to give people jobs, how to give massive amounts of consumer satisfaction in terms of the product. That's what Matt's comment was about. And then how to unlock opportunity. the more I've realized about the world as I've gotten older, the more I've understood attention is the asset. It is the only thing that really matters from a business perspective. How can you capture attention? I mean, the argument around Tesla right now is advertising because they're not capturing enough attention. So like attention is everything. If you build something to get people's attention, you win. Whether like no matter what it is, you have a shot of winning in life and doing the things you want it to do. So Instacart unlocking hundreds of millions of dollars, 740 million to be exact, of advertising opportunity for these individual, probably mom and pop localized stores that are in, Milwaukee, Wisconsin, that wants to target the 40,000 people in their city. You need a tech product to get those 40,000 people connected to the local retailer. This is the bull case for Facebook and small businesses, right? Because the local retailer has to worry about selling cucumbers. They can't worry about how to amalgamate 40,000 people to use a product. That is why tech companies are so special, because they figure that part out. They figure out how to build the network effects that are absolutely monumentally exponential at unlocking value. And as a result of that, the premium that people are willing to pay to access that many people's attention is gigantic. And that's why they made $740 million in advertising revenue just off grocery stores. That, it seems like it's going to grow no matter what if they can keep expanding to more stores. Because if more consumers like the product, then grocery stores are going to be like, okay, how do we get our product in front of more people? And then it comes down to advertising. On top of that, if you hate the ads in Instacart, what if they start Instacart Plus and like now their average revenue per user goes up because you're paying 15, 20 bucks a month? Like there's so many opportunities in my opinion. I know I'm giving a big bull case for Instacart. I'm still not buying the IPO, but from all I've said qualitatively, and then you look at the valuation at 10 billion, 428 million in profit, probably going to be around 530 million this year, and 2.9 billion in revenue at the end of the year. 3.4x price to sales. I don't think it's that crazy. I mean, I think the IPO actually will do well. I'm not going to participate regardless because I don't want to take the chance, but it doesn't sound that insane. And the reason it doesn't sound that insane, and this is the last thing I want to show on, oh my God, we have 3 minutes to the market open. Wow, this one took some time for us. We'll talk about Palantir during the market open when we get into it. Is Instacart's valuation from 2021. Yeah, so this is the other big case. Their internal valuation was 24 billion last March. March 2021, 39 billion. Let me say that again. March 2021, 39 billion. Now, last March 2022, it went to 24 billion. What are they trying to IPO at? 10 billion. 39 to 24 to 10, doing 2.95 billion in revenue, basically a 3.5x price to sales. That's why I think people are excited about this, because you're getting a bigger discount than the VCs in 2021. By the way, if this was 2021, ARM would probably be 500 trillion. No, probably like 100 billion. But like, that's why I think people are excited about this one. So that's my analysis of the Instacart IPO. Hopefully it gave some value to, and it made a lot of sense. But that's what we should be looking at, or at least be thinking about when you think about Instacart IPO. Sachin, thank you for being here. Kelly says there's an Instacart Plus. I'm already a subscriber. Okay, so they're already monetizing from that perspective as well. All right, we got 2 minutes till the market open. Ladies and gentlemen, 460 people. Thank you all for being here. From the bottom of my heart, means the world to me. In this market open, we are going to be seeing where ARM continues to go. As you can see in the pre-market, it's at $68.80. It is up another 8%. So if you bought the ARM IPO yesterday, let me know in the chat if you bought it and what price you got in. If you did get in, you're likely up. And so the question becomes, do you maintain those gains or do they crash as investors take profits? I'm going to take the maintaining of gains, or we go to like the 61-ish range. I think we can get to 61. It can come back down. I don't know if it goes back to 51. I think that's too dramatic of a decline, but there might be a sell-off. Granted, I think the sell-off will not be as high because I still think there's a lot of FOMO. And that's the question. Does the sell-off win or does the FOMO win? That's the question. Does the sell-off win today or does FOMO? Tesla 276 in the pre-market. Where's Palantir? I haven't talked at all about AIPCon, so I'll give my thoughts as we get deeper into the market open. 1576 down 0.47%. The market really didn't have a reaction to the stock yesterday based on AIPCon. It was kind of, I thought the presentations were good, but it was nothing monumental to the market. S&P at 447, down 0.33%. So the S&P is down a bit from 450 yesterday in the morning. And SoFi, $9.02. SoFi hit like 9.15 last night. It was on Robinhood overnight trading. It opened up last night for overnight trading. So SoFi got some love last night as it was passing the $9 range. All right. ARM IPO in 10 seconds. We will see on a Friday what's going on and where it's going to go. Here we go. The stock market, September 15th, 2023, 9:30 a.m. is now open. Wake your ass up. Here we go. The stock market is open, and we have ARM. We have ARM at 68 bucks, and it's up 6%. There you go. Look at that. Look at that green candle. That's insane. It's so thick and big. It's like that green candle is just insane. $68.02, up 6.95%, up 7%. I want to see this run. How much does this run? The volume already is ridiculous. We're looking at 12 million. Wow. 12 million shares in 45 seconds exchanging hands. $67.30, up 5.7%. All right, we'll go back to that in a little bit. ARM is up. Palantir down a little bit, 1580.22%. Google, 52-week highs yesterday at 139.55. Google now 139, market cap of 1.75 trillion. Dolores, Robinhood, $10.51, down 0.66%. I tried to get some more Robinhood yesterday, but my call debit spread order did not fill. Robinhood is undervalued. I will definitively say that. That is not financial advice, but in my opinion, Robinhood is undervalued, and I want more Robinhood. Robinhood right now, $10.51. Airbnb at $143, AMC at $812, Starbucks $97.20, NASDAQ 13,891, down 32 points at the open. Tesla at $278. Look at that. Tesla's inching towards 280. I don't think we hit 280 this whole week. I think even with the Adam Jonas report, I don't think we got to 280. So Tesla right now, Tesla at 278.97 was the high. So we are very close to the highs on Tesla. We'll go back to that one. DNA, $1.09 below the $2 range. SLG, 39.78 right now. What else do we have? Here we go. S&P, QQQ at 376, S&P at 447, Disney, 85. Look at that. Disney was $80. It was close to $79 just a couple of days ago. Disney, for some reason, doing pretty well. Not bad at all. $85.51. SoFi, $9.02. SoFi holding on to that $9 range. Fubo, $2.07. TFC, I heard they got a downgrade today. I haven't had time to check the downgrade. $28.78. So a nasty 2% decline on TFC. And we'll read the downgrade in a little bit when I can get a chance to pull it up. Intel at $38.52. If I had to guess, the downgrade is because they have loans that have losses, which the same argument remains that, when the Fed cuts interest rates, those losses are not going to exist. But in the meantime, you're definitely going to get some bearishness on the regional banks. Enphase at 121.67, Nvidia 454. Nvidia down while ARM is up. Where's ARM? Okay, ARM coming down just a little bit at $66. Now we got a red candle. We hit 69. Look at that. The top was 69. Incredible. Of course, the top was 69 for ARM today so far. JP Morgan 148, Bank of America $28.92, Zoom at $71, Walmart 165. Where's KK Innovation? Where's our girl Kathy? $43. She bought another 258,000 shares of Roblox yesterday. I'm not bullish on Roblox that much, but she bought Roblox up 2% on the day. Spotify 155, Bitcoin 26,415, Netflix 402, up a little bit on the day. Wow, PayPal, not bad. $65 range. We haven't seen 65 in about 3 weeks. Not bad at all. PayPal, I do have a decent position in PayPal. I think a lot of people in the chat are on PayPal as well. PayPal at $65.22. Not bad at all for PayPal. ARM again at $67 and Palantir at $15.78. All right, not too bad. Matt says, look at the MSOS cannabis ETF. Okay, let's pull this up. I invested in cannabis stock back in 2020. I haven't touched it since then. Wow, up 8%. Okay, so weed stocks today are definitely getting higher. No pun intended. 973 up 8%. I'm assuming some news that that affected the ETF or a company in the ETF is what's causing the gains on this. Let me check this out on Robinhood real quick. I want to see what companies are in this ETF. If I look here, oh, it doesn't show on Robinhood. Oh no, it shows a little bit. Okay, so we'll check that out in a second. But okay, weed is up today. That is good as well. So weed is up, tech is up, and where's GM? Let's go to the automotive guys. GM is up a little bit, probably because they put out some negotiations and now they're waiting for the workers. Ford down 1.39%, and GM is up. All right, so legacy auto down a little bit or flat for the day, and Tesla trying to reach those 280 levels, now 276 on the day. Not bad for a Friday open. It's green. It's not too red. A lot of news. ARM not doing too bad, but definitely not one of the worst Fridays we could have to start Market open. Crossroads says PayPal is going to pay me well. Crossroads, for those that don't know, is one of the biggest PayPal bulls I know. He's on Twitter as well. If you just look up Crossroads PayPal, you're going to find a lot of his content, and he understands this company better than most people on the planet. So if you have any questions, I would definitely ask him on Twitter about PayPal. Justice Department begins issuing marijuana pardon certificates under Biden aura. That might be a reason. More people getting out of jail for marijuana and less criminalization of it is also a very, very good thing in the context of these weed stocks. All right, let's get an update on some of the macro stuff I wanted to discuss as well. So we talked about a bunch of things this morning. I want to discuss a little bit around the S&P 500 and their ability to maintain their momentum as a result of large cap tech holding up the S&P. So the S&P trades at right now 21 times price to earnings roughly. 5 companies, I guess you can include all 7, but 5 out of the 7 are really responsible for that. If you get rid of those companies, it trades at a 16 times price to earnings, which is a lot more cheaper and in line with where the S&P should be trading at an 18 PE on average. 21, a bit overvalued, but one could argue if inflation is going down, then there's a lot of momentum. We could see it reaching some potentially levels of 4,800 by the end of the year. So here's a little bit more analysis on why the mega cap tech stocks can't pull back in order to maintain this momentum. And then after this, I want to talk about Apple and some unique things that Dan Ives, who is contrarianly, if that's a word, bullish on Apple, and we'll get his thoughts.
Concerned about a possible impact to the markets from the UAW strike. We've seen data that if it goes for 10 days, it's a full-blown strike, not the targeted, but 10 days of a full-blown strike, that'll cost the U.S. economy about $5 billion.
This is a risk scenario, and of course, people are watching it because potentially it can have an impact on that wage inflation. But I think in the way that we're looking at markets right now, this is not a significant risk yet.
All right, you say yet. So you mean in the near term, long term? Because there's two sides of it. Obviously, the slowdown for the economy, but also, as you mentioned, wage inflation, something a lot of investors have been worried about long term with different labor negotiations going on around the U.S.
I mean, it's, as you said, like, we don't know how long this is going on. As the previous guest said, there's potential that this could still be resolved very slowly. And there's many risks out there. I think the key thing that we're focused on is the fact that the benign inflation, that data that we've been getting, makes most market participants believe that the Fed has room to pause here. And that's one key. And then the second is that the U.S. consumer has remained really strong, and that's okay. Put out the fears of recession going forward.
All right, so you're not overly concerned about the strike in the near term. Fair enough. One of the things that you say that we need to see this rally going in the market, at least for this year, is a sustained AI rally. We saw the ARM IPO yesterday close 25% higher. The ARM CEO saying you just can't do AI without ARM, and now the stock's up almost 10% in the pre-market. Is this
and again, that's why it's up. I mean, the ARM CEO saying you cannot do AI without ARM. When you get that many people to believe in that statement, you're going to get a pump right now up at 6.2%.
Confirmation that there's more appetite for this AI rally?
Well, what I would say is that first, for the S&P 500 to stay up here, it's just kind of mathematical that you can't have a pullback in, the Magnificent Seven names, because they've been such a source of the gains. I think on AI, where this is not blockchain or something like this. There's many real use cases going on in companies, and I think that we hold out the upside possibility that as this AI gets used by a broader set of companies within the economy, companies can maintain the margins that will continue to drive profit growth going forward. So that's our optimism about AI is actually much broader as we hear from companies all the time that they're expanding their use of AI. So
for them, AI, and for a lot of fund managers, is a question of profit growth based on enabling more productivity. And that's really it from a valuation perspective. So the core argument he's making is the S&P can't go to 4,800 or 460 or whatever if Google, Apple, Amazon pull back. If you look at Google, Amazon, Microsoft over the past couple of weeks, Google and Amazon hit all-time highs. Google at 140, Amazon all-time high was like 180, but it's at 145, which is 52-week high. And same thing for Google. I think 52-week high, not all-time high. So those companies are getting that premium because of AI. The question is, will their earnings growth show that? I think last couple quarters, their earnings growth are starting to show revenue from AI. Obviously, nothing super substantial, but that's what the market's betting on because it's a growth stock. And so the market's betting on the growth from the AI to lead that rally. That's where the S&P 500 can't go back down to horrible levels if the big cap tech stocks don't go down to horrible levels. So you're in a conundrum. Either the S&P 500 is overvalued because of big tech companies, and big tech companies are overvalued, therefore the S&P 500 is grossly overvalued, or big tech companies are not only properly valued, they're undervalued given the growth we're going to see in AI. And we kind of saw this with NVIDIA, right, to an extent. And as a result of that, the S&P 500 does have room as a conglomerate of 500 companies, even if 7 are the only ones that matter, to go higher because those companies still have room to grow. That is what we're looking at here in terms of trying to understand it a little bit more with what's going on with the S&P. Having said that, let's talk about one of the big tech companies, which is Apple, that a lot of people are bearish on. Most people are saying it's ridiculously overvalued. Only services are growing. Revenue growth isn't there. People don't want the iPhone. Vision Pro is a piece of crap. Here's Dan Ives, who has a $240 price target on Apple for about, I think, from next year, from a year from now. So he sees a lot of upside to Apple. That would be putting Apple at a $3.5, $3.6 trillion company. Here's what he had to say. He had some very interesting thoughts around AI, their AI play, the Vision Pro, and ultimately what they're going to do with this iPhone 15.
Down 1% on the heels of the new iPhone 15 release. Our next guest was at Apple's big event. Joining us now is Dan Ives, Wedbush Securities. He just raised his price target on Apple to 240 from 230, has an outperform rating on the stock. What did you learn in Cupertino, Dan?
Yeah, I mean, like, look, in my opinion, this is still massively underestimated by the street in terms of what this upgrade cycle is going to be. You know, if you look from a chip perspective, battery technology, and what I ultimately is going to be massive promotions that we're going to see from the carriers, we've already seen from Verizon, it's going to stimulate what I view as a mini super cycle. And I think yet again, the street is going to underestimate Cupertino.
250 million of the 1.2 billion iPhone users you think around the world have not upgraded their phones in over 4 years.
Well, I think that really is the key thing here, because I think ASPs ultimately are lifting. We think ultimately about $100 more from an ASP perspective. And it's about the pent-up install base.
Wait, didn't they
ASP is average selling price.
not raise prices?
So they raised prices on the Max Pro. If you look at Pro, they kept that the same. But the most important thing is the mix. What we're seeing out of our Asia checks, 75% roughly are going to be Pro and Pro Max. What typically is 60%. That's a huge uplift for Apple. And I think when you look at what the street is called, you know, maybe a knee-jerk reaction here, and maybe not expecting that this is a wow type of launch, I disagree. I actually think when you see how this all plays out, I think it could actually be iPhone units up year over year. And the important thing is in terms of China, we've done a lot of work this week talking in and out of Beijing, a lot of experts that we talked to. It further confirms my thesis that this is bark a lot worse than a bite, 500,000 units at worst that could be
You're
impacted.
talking about the government ban, or what we called at least, or was reported as. You think you're talking to the right people? I mean, you know, you have some Chinese, you have Asian supply chain checks, you have government, I guess Chinese industry contacts, you say, but do you think you're talking to the right people?
Look, I think these are contacts, at least for us, that over the last 7-8 years, with all the black swan events that Apple is going into, they've, I think, navigated us well. Now, look, there could definitely be some scrapes for Apple. I'm not saying that this is rosy and rainbows in terms of having a champagne dinner in Beijing. But what I do believe is that the fears here are way overblown. And I actually think when you look at Huawei essentially is the equivalent of an iPhone 12. I mean, if you actually just compare it from a technology
That was the nicest insult he could ever give.
perspective. And I'm not saying that there might be, in terms of shot across the bow and sort of warning shots, but overall, in my opinion, this is, I think, ultimately going to be a lot better than I think the street's anticipating. We believe 45 million iPhones will be sold in China. Only 500,000 at most, we believe, could be impacted here.
When do you see revenue inflecting positive year on year? And if it's not this quarter, in the middle of a launch, isn't that kind of weird?
Yeah, I think we start, Carl, at that point, I think in December, going into March, that's where you're going to have services, double-digit growth, The FX headwind now starts to become a tailwind. And then when ultimately you're going to have units that I believe starts to uptick, call it 4 or 5% with ASP uplift. You combine that all in terms of where it ultimately goes, you're looking at a renaissance of growth for Apple. Now, some will argue the valuation, and I get it, but I view it as the services business that goes to double digits. I think that's worth 1.4 to 1.5 trillion.
Tim Cook.
So he thinks services in and of itself that will go to double-digit growth will give a like further of $1 trillion in market capitalization to Apple. So he's not saying there's going to be a crap ton of phones being sold, even though he does think they're going to sell 85 million iPhone 15s. But he thinks the services from the installed user base is going to give them the means to get the valuation. And that's not really talking about what the Vision Pro could potentially become if it is like their next iPhone. Now he's going to talk a little bit more about their AI.
Cook is not in the room in the AI meeting with Congress right now. Is there an AI story for Apple? Because that's what tech investors really want right now, isn't it?
And we believe it's 2025 when they come out with the AI App Store. I think that's going to be a huge piece.
What's going to be the AI App Store?
So we believe,
so this part confused me. I was like, AI App Store?
And this is our view in terms of talking to developers. Vision Pro, that's the start of a new form factor, essentially a new app store that they're starting to build with developers. But that's ultimately going to go into what's going to be AI apps specifically in the App Store for Apple. And that's going to be another area of monetization, from health to fitness to life sciences. Apple, when you put it together, we believe they've spent almost as much as Microsoft has on AI.
All right, so I think he's correct on that stat that Apple has spent as much R&D on AI as Microsoft has. I have no clue what Dan was smoking to say they're having an AI app store. As you guys say in the chat, he sounds like a surfer. He definitely sounds like a surfer. He dresses like a surfer too. I dress like a surfer, I think, hopefully. I don't know what this AI app store is talking about. Now, if you're saying an app store for the Vision Pro, yes, there will be a separate app store for the Vision Pro. Are the Vision Pro's apps all going to be enabled via AI? Maybe. Because I guess you need AI to build headset apps, but then again, I don't think you do, given the Meta Quest app store that exists. So when he means the AI app store, and he's like, oh, they have services and all this health stuff that's just going to be AI oriented. To me, if it's still on the iPhone, it'll be an app that's maybe powered by a large language model, so you can stamp AI on it. But it's going to be on the App Store. It's not like Apple's going to be like, we are introducing the AI App Store. You can download the AI App Store if you want to download the AI version of Instagram versus Instagram from the App Store. So I'm very confused on what he means by that. Maybe he's done a little bit more due diligence and he's talked to people that are talking about what they're going to do. But the bull case, let's say there is some AI App Store and the Vision Pro, and in the next couple of years, the way the iPhone is going to be used are only going to be integrated via apps that use AI. And I don't even know what that means, but let's say that's the case, because like YouTube as an app uses AI, right? So I don't really know exactly what he means right now. If that's a massive market opportunity in terms of just the billions of people that will be downloading products and services from those apps and then using them, the services revenue is going to explode, because think of the App Store in 2008. I mean, that's trillions of dollars of value, because you had a dual-sided marketplace where developers could create products and consumers could enjoy those products. That's why we have the best apps that we have in the world today. If they build a new version of that for a new form set or a new set of products, maybe that could really be big. So I guess that's the bull case. I'm not really bearish Apple. I just don't fully understand a lot of what Dan is trying to say. I think it could go to 240 though, just for the hell of it, because Apple is Apple, and it's one of those companies that's the most respected. Buffett owns it, all that stuff. If they just do anything decent, then maybe they can get up there. But I'm not willing to take the risk yet at this valuation with my own capital. So I guess it's an AI app store. Dan is just trying to fan the flames of AI. He is positioned to benefit from AI stocks to do well, so he wants to promote them. I agree. It's just when he put out the AI app store, I was like really thinking, like, does he know something we don't know, that there's going to be an app store geared towards AI? I didn't understand it, but yeah, I mean, I agree. He definitely is probably trying to fan the flames a little bit around AI. All right. So last topic of the day, we got about 10 minutes left in the market open. First of all, thank you 514 people for being here. And thank you for the people that joined at 8:45. On today's show, we were able to cover the ARM IPO, the United Auto Workers strike, a understanding of how tech companies have basically expanded and democratized wealth to the entire world. We did a little bit of analysis on that. And then we did a pretty 14-minute deep dive into the Instacart IPO. At 30 minutes, if you watch this later, the chapters will be there. We did a 14-minute deep dive into Instacart and if there's any value to getting it. And then we got into the market open. The one thing we didn't talk about today It's Palantir. Palantir. We did not discuss good old Palantir. So for the next couple minutes, I'll discuss Palantir, and then we will end out the stream for today. Look, I thought the Palantir AIP con, first of all, let me give my critique of it, then I'll say why it was good. Now, for the critique of it, for the people that don't realize what kind of happened in the beginning, Karp had CEOs of some of the companies presenting ask him questions for 40 minutes. And it was really awkward because it was like some guy would come ask us a question and then they would leave. And some new woman would ask a question and then they would leave. And all of us were like, why is he doing this? Right? Like, this is like, what's going on? And then it turns out Sampo Japan, which is one of the biggest companies using Palantir that was supposed to present at the event today and give it an entire presentation on how they're using AIP, their president had stepped down yesterday. And the reason their president stepped down, let me pull this article real quick, is because he committed fraud. And so I think Sampo called Palantir. Maybe the guy presenting probably was even at the conference and he got the message from corporate that said, we cannot present today, given the controversy we have. So Sampo Japan insurance president to resign over big motor scandal. Not to get too deep into it, but apparently he was taking bribes or something. And so as they were charging more for insurance claims, it's some, I'll put it in the chat, but it's some scandal that happened. And as a result, Sampo couldn't do it. So I think last minute they had to kind of figure out how do we fill up this 40 minutes. And they filled it up by Karp basically rambling for 40 minutes. And I can't blame him for rambling too much because I don't think he was prepared to talk about anything. They just threw random questions at him. And you can tell the questions were so random. Like someone would come up and they'd be like, how do you philosophically think about worker automation? And then Karp would go on his diatribe. And I was like, this just, I don't know what the point of this question is. I don't even know why we're having this discussion right now. And then on top of that, Miller's Ale House was supposed to present and they didn't present either. So I think 2 out of the 6 presentations were cut for some reason. And as a result of that, they had to fill more time. So that was my only critique of AIPCon. Now, in terms of the actual progress of the company and of the conference, first of all, they have 150 organizations using AIP now. Okay. They had 100 back on August 7th. So that's 50% month over month growth of really, really big companies. And they had a bunch of slides showing all the different companies that are using AIP that are in the actual terminal for AIP, not on the pipeline, but actually using the product, which is amazing. So that's really good growth that we're seeing. They had 40 organizations in the past 2 weeks sign up from it. That's pretty amazing stuff. Now, in the context of the actual presentations, I thought the best presentations, and I think I'll react to them later. We'll talk about it on Palantir Weekly tonight. But Eaton Corporation, HCA Healthcare, and CPKC, which is one of the largest railroad companies in the world. The way they were explaining AIP, as a shareholder, all I cared about was like, yo, is this product really going to print tendies in the future for Palantir, or is it just like a smoke and mirrors? Given the rate of growth in terms of acceleration of using the product and how the customers spoke, and not just spoke, but showed what they're doing with AIP, it got me really excited. And I don't have to get super deep into it now, but if you go into those presentations, the stuff they're doing, the AI-based enable recommendations, the structuring of an ontology of your data, all of that stuff to me made a lot of sense as just an average non-technical person looking at the product and how it's being used. And it made me more bullish on Palantir at the end of the day. And all we need to now see is revenue growth, but it doesn't seem like the product is, a piece of horse crap. And quite frankly, I think it is differentiated from ChatGPT for the enterprise or any of the stuff Google is doing. I don't know how I can explain the differentiation, but it doesn't seem like what a company like CPKC would need to do, they could easily get from a ChatGPT for the enterprise. It just seems a bit more different. And so I want to go deeper over the next couple of months to kind of figure out what those core differences are, but it definitely seems like Palantir has a market opportunity to capture and be able to get. Any way to watch the full stream shown yesterday? Yes, go to my YouTube channel, click live, and it'll be there. The Palantir thing is not on the channel because I think it's still unlisted, but if you click live on my channel, you'll get the full 4 hours of it. Okay, so I thought presentations were overall good. Last thing I'll say here is a lot of conversation happened on Twitter yesterday about their growth strategy, right? We had a lot of people basically saying, look, 12% growth isn't good enough. AIP monetization is not there. This is a stupid business idea for a SaaS company to just give away the product for free, yada, 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 yada. And while I understand the concerns of that, ultimately, I think that if it's a growth company, they will grow. There has to be a catalyst for growth. That catalyst for growth obviously seems to be this AI product. And that AI product that is going to grow needs time to be able to offer the value to the organizations using it so that Palantir can ultimately increase the prices that they're charging customers for and be able to monetize. So either you grow customer count or you grow the average value of your existing customers. It seems like these 150 customers using AIP are already using something like a Foundry. And as a result of that, if Palantir tomorrow says, hey, can you pay $2 million a year from it? That's $300 million. And can you pay $5 million from the 150, right? That's $750 million. Like, if you can just turn on the spigot, which is a word I've come up with over the past couple of weeks, and get these customers to start paying because they have unlocked the value and they are ready, right? A company like Babcock Defense that has done $5 billion in revenue is ready to pay $5 million a year. That's a question of just signing a contract. It's not a question of having to go through a sales process. The sales process is them using the product. And what CodeStrap talked about last night, he offered some clarification, is that you can't really use AIP without Foundry, which makes sense because you need an ontology of your data to give the context of the reality of your organization to an LLM, which is what AIP will connect the interface to, the LLM's interface to the back end of your data, that ontology. So AIP is kind of useless without Foundry in this current stage, which means if you're not selling AIP in terms of revenue growth, you're still being able to sell Foundry, which is where they're getting the growth from in terms of commercial revenue. If that's the case, if they're selling a crap ton of Foundry and then eventually they just upsell AIP because they're allowing you to use AIP for free while you're using Foundry, then it's a question of turning on the spigot in 6 months and unlocking that massive revenue growth. But until they do that, we have to deal with crappy growth because you're assuming that the growth will come once these customers fully engage and understand and are integrated with the product of AIP. And so I think that's going to happen. That's the bet I'm taking. I'm very excited for that. It makes a lot of sense. The contract, again, the Babcock contract, we haven't even talked enough about because there was so much news, but like there's a lot of companies they're working with. And on top of that, you got this NHS deal that's coming up in a couple of weeks. Look, Karp talked about yesterday about how they're thriving in healthcare. HCA, it's grown from 40 locations or something to like they want to do 4,000 by the next 6 months, all on AIP. I mean, it's insane the level of growth some of these companies are seeing internally by operationalizing all their data and then deploying it at scale across thousands and thousands of locations. And what is that worth to a client is the question. If the NHS deal is worth $500 million for us in a couple of weeks, you're going to have more healthcare companies besides HCA, Cleveland Clinic, Tampa Bay General Hospital, Concordance, Cardinal, and that's just 5 out of many more that I can name, that are using Palantir's healthcare products when one of the biggest countries in the world in terms of population growth for people using a socialized healthcare system are using that same product. What is that AIP product worth to HCA Healthcare at that point? I don't know, but I would argue it's worth a lot more than what it would be worth today if they tried to squeeze money out of them. And that's why I think this go-to-market strategy ultimately makes a lot of sense for them to be able to do. Squigget sounds like a slur. It's spigot. I know it's spigot, but squigget sounds better. So we're saying squigget. So Ray's like, I think you mean spigot. Yeah, no, I mean spigot, but I'm saying squigget. So that's it. Those are my thoughts on Palantir's AIP Con. All right, let's go to word of the day and end off this beautiful Friday. I hope you guys have a great weekend. I don't live stream at all on Saturday and Sunday outside of Finance Junkies. So Saturday is the one day I kind of get to not talk to the public on the internet. I do have, videos come out and clips, but I hope you guys take this weekend to relax, enjoy, kind of get your mind off some of this stuff, and get ready for another week in the world of living on planet Earth. All right, word of the day. Here we go. Word of the day is evince.
Evince.
To show clearly or make evident. The artist's masterpiece evinces her incredible talent and attention to detail. The data from the study evinced a clear correlation between exercise and improved mental health. Okay, I know exactly how to use this word. So give me a second. Let me pull one thing up. You guys like, what the fuck is Amit about to pull up? Yeah, I know you guys are skeptical already. Like, Amit's going to pull up some bullshit. Here we go. I know exactly how to use this word. Evince, to show clearly. Okay, here we go. I just got to find this. Hold on. Where is it at? I'm gonna do it. Do I have it here? Is it in this email? No, it's not in this email. Oh, give me 1 second. This is going to be worth it. Evince. This is how I'm using the word. Oh, wait, hold on. I know what Gmail it is. Okay, so let me share the screen here. This is going to seem like a little bit of a brag, but it's not really a brag. It's more so about me using this word. All right, here we go. Evince. You guys ready? This is how I'm using the word today. What are the comments? What are the comments saying? Jesus. All right, here we go. Evince. This is the email I got yesterday from my YouTube channel. Congratulations, you have reached 6 million views. And what I was going to tweet, now that I will tweet with this new word, is I have I have shown 6 million people. I have evinced 6 million people that I am the funniest finance YouTuber on the platform. So 6 million times people have been evinced of my capabilities of being funny in the world of finance. That is how I'm gonna use that word. Okay, not the best use of the word, but regardless, 6 million views. That's pretty cool. Events, hopefully, that's making it more clear to people that that this channel is cool for them. And my goal with the channel again is to give a lot of information and help people understand stuff, but also to entertain, which is the good part of it. Amit is evincing on Twitter regarding his gym gains. That is also correct. Let me show you this one last tweet I put up yesterday in the context of evincing. So here was the tweet. Here we go. This would have been a way better way to use evince. This would have been way better. Here we go. Okay, so this is the picture I put up yesterday. So as you can see on the picture, 152.6 pounds, 2.6 pounds away from the 140s. Just like the 450 level on the S&P 500 is psychologically important, so is the 140s for me. I haven't seen 140 pounds since 2020. For context, I was 178 back in May. Let's get to this S-curve of degrowth to evince my body fat. There you go. To see 140 by November. That is my goal. 140s, we're getting there. It's going to happen. Going to get to the S-curve of degrowth to evince to get to the levels that I want to get to. And yeah, bro, 2.6 pounds. When we get to the 140s, that is psychologically important for me. Just like S&P 500, you want to see certain levels. 140s is different, bro. I haven't seen 140s in 3 years. So that's going to be fun to see when that happens as well. Michael says eye roll. Irregardless isn't a word either. You guys don't understand. The reason I got 6 million people to, not 6 million people, 6 million times for people to watch my videos is because of my quantum capabilities to re-amalgamate and conclamorate words that appeal to an audience's psychoanalytical paradigm, which enables them to feel more deeply evinced about the value of my content. That is what I do here. All right. Here we go. Amit has evinced the cowbell 6 million times. Amit evinced his ability to use the word evinced in a sentence. You guys are funny. You guys are using evince way better than me. Buying puts on Amit's weight. Yo, Garcia, I should have tweeted. That should have been the end of the caption. I'm buying puts on my weight. That would have been great. See, Garcia, you need to DM me when you have these captions, and I could edit the tweet, make it even better. All right, everybody. That's it for me. Thank you also for still being here. Again, I think I've officially decided next week I will be doing market opens for 75 minutes instead of 40 minutes. So we'll be starting at 8:45 and we'll be going all the way till 10. I know I said I would sleep on it and make the decision by next week, but I made the decision the day after I did the CPI live. It took one CPI live for me to get up at I got up at like 5, but to start the stream at 8:20 and be like, yo, it is fun to have a lot of time to do this versus like from 9:20 to 10, you only have 10 minutes till the market opens. And then once the market opens, you have 15 minutes of like charts. And then you have maybe 10 minutes or 20 minutes to give some analysis on what's going on in the world versus like a good 45 minutes to talk and then get into the market open. So I think it's a good idea and I'm excited to do it. Lilium is down 5.4%, by the way, just got that notification, and it should be fun. It should be fun to keep doing it for the rest of the year. So that's it. Hope you join every day, 8:45 a.m. We will be here. Have a great Friday. Hope you enjoy it, and we'll see you tonight for SoFi Weekly and Palantir Weekly. Bye, everyone. Have a good one.